I've been talking a lot about personal finance. I've been lecturing you on methods how you can improve your finances. I've given you several suggestions, and most people, when you talk to me, say that you have implemented these suggestions. You have appreciated my efforts, and you have told me that I have made a difference in your life, especially in managing personal finances. Today, I want to talk to you about how you can measure the current state of your financial health. Finance is always a quantitative thing, and though a lot of qualitative methods improve it, finally the results are measured in numbers. So, if I have to see whether you have made an improvement or not, I should know by numbers how much you have improved. Therefore, irrespective of amount of the money you are making, your salary or your income from business, it is important that you score high on these scores. A person who has a high salary or a high income who does not score well on this means that he is spending all his income and is not doing well. A person who is not earning much but who scores extremely high on this means, in spite of having low income, he is a person of great discipline and means that every money, every paisa he is earning, he is taking care in spending it. Yesterday, I met a person who was only a plain accountant in a hospital. He has turned out his life with minimal income. He has added insurance selling as a second income and has done remarkably well. And he managed to buy a house debt free in Madras. Not only that, he has substantial income and within a couple of years will not need the income from his salary. This is the kind of financial freedom I want you to achieve for yourself. This is quite possible if you are disciplined for a decade. But before we go into the steps I use to measure your financial net worth, I want you to do the following. I want you to hit the like button and comment more on this video. If every person who saw this video commented on this, it would help the interaction and help us generate new ideas for our channel. 2. Press the subscribe button of the channel and persuade your friends and relatives to do the same so that the quality of the content improves and the message reaches far and wide. And finally, don't forget to turn on the bell notification because unless you have turned on the bell notification, you will not receive every video that has been sent. The algorithm does not push the video to everyone who has subscribed. You need to turn on the bell notification. First and foremost is the first equation. This is completely a mathematical equation. This mathematical equation measures your net worth. What is your net worth? Your net worth is the sum total of all your assets minus all your liabilities. First, let me define what are your assets. Your assets are in four categories: gold and other precious metals as silver and platinum. 2. Land you may have. 3. Value of stocks and securities and bonds. And 4. Cash in bank. These are the four major assets you may have. You cannot measure any other software or books you have written which is giving you continuous royalty. Use these four assets and then from that detect all your liabilities. Your liabilities are your credit card debt, personal loan, what is outstanding, what you have to give your friends and relatives, and what you have taken as mortgage loan. The vehicle loan is a liability while the vehicle is a reduced asset. Calculate your net asset and then think about it. So, if your net worth is sometimes deceptive, suppose you have 50 like me and you think you have about a couple of crores in net worth and it includes a house and a car, that is deceptive because my working life will come to end very shortly. The house in which I stay is not going to produce any income, nor is the car. So, what is important is for those who are nearing retirement, It is very important to have assets that produce cash flow. If my asset primarily consists of the house I live in, that is no asset. So, sometimes worldwide, the house you live is not considered part of your asset. That means you are way out of track. Whereas at 30, if I have a million, if I have 2 crores and about 1.5 crores is my house and car, it means I have made a start and I have 20 years to accumulate more money. The house you live is not a great asset. Second is the savings rate. Savings rate is the portion of salary which you provide in savings. Your PF is a compulsory saving. Therefore, if your salary is 1 lakh, you should be saving 30 to 35,000. If you save anything less, that is a poor rate. If you're not saving at all, that is most dangerous. So, a savings rate of 30% for any income group is a must. The higher your salary, the higher the savings rate should be. If you and your wife are making more than 2 lakhs, your savings rate should be a nearly 50%. Your savings rate determines at what rate your assets will grow finally. Third, what do we call debt to income ratio? This is your total ratio of your total debt. That is, take out all your monthly debt payments and divide them by your income. This is a metric that lenders usually check when you apply for a loan. A rule of thumb, your debt is manageable if your debt to income ratio is 10% or below. But if you have an housing loan, straight away 50% of your income goes to debt. And this is why I urge you not to buy a house on EMI several times. Fourth, most important, your credit score. You can pay a small fee to get your credit score. Check your credit score regularly and see what you are getting, and try to see whether all the loans are being recorded properly. If there is any mistake in your loan payment track record, please rectify it by notifying the rating agency and the concerned bank. 5. And finally, you should have a retirement fund. Your retirement fund is a good indicator of how prepared you are for retiring for the future. There are two popular ways to measure your progress. One is using a retirement calculator. You plug in some information about your financial situation, including your age, income, and when you want to retire. And the calculator determines how much you will need to save in both total and per month only to retire. The second is simple. Compare your retirement savings rate today, and you should compare with how much you should have saved by this age. If you are ahead, you are doing fine. If you are trailing, improve pretty fast. Thank you for watching. Be rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.